We do this. Okay. So first things first, let me quickly share, what we have done, as promised. Guys, please request you to put yourself on mute. I can't keep going back again and again. Okay. So what we have done is, if you go to sifprime.com/academy, as promised, we have built the entire, book for you, which is exactly related to the new exam pattern. We kept the series 13, but I don't think it is required at this point of time. If you go here, start series 5-day preparation, what we have done is this, right? So these are the three, components that you have to study. Mutual fund distributors, mutual fund exam. Equity derivatives and then interest rate derivatives, right? And then what we have discussed this multiple times again is, you study by themes, not by chapter 1, chapter 2, chapter 3. So that's what we've been trying to do, right? You study chapter 3 first. I think I would say go through equity and interest rate first, which is what we have covered already. Knock out all these five chapters, and then you got like 55% of the exam done. Within mutual fund, it's all theory, nothing else here, right? If you see here, we have prepared a notes here again, right? Investment landscape, the same concept, right? I think we have done all this stuff, in our MFD exam as well. So you can just glance through this, and what you can do is you can revise these concepts if you want. We created some, we don't have any question bank yet, but we created some questions for you from the book itself. You can, practice those. And then there is a final scan, right? So this is what we have done for each chapter for the new syllabus, concept, again, concept and role of mutual fund. To be frank, I think on a very candid basis, you should be able to read all this stuff in just, less than, I would say, in less than a day, or even forget about even a day. I think you can actually finish off everything in 2 to 3 hours, because it's the same concepts here. See here, right? See, legal structure. We know legal structure. We know sponsor, trustee, AMC, custodian. That we have done that multiple times, in the exams. Again, what is the scheme related information? They talk about SID, SAI, KIM, etc., and all that stuff. Now portfolio. Okay. So please do check this out. I think this should be more than sufficient, for you to pass the exam in terms of going through that. Don't go through that whole book again in entirety. I think the new book itself is almost 800 pages again. Not 800, I think close to 600 pages. So, I mean, I won't suggest you actually to go through that. Study high level stuff, and I think you should be able to do this. Okay. Cool. Any questions on this? Yeah, we have done the question bank, sir. What we will also try to do is, as we go along, from the existing MFT exam also, we will try to put in some questions which can map with the existing chapters, so that it is sort of a revision for you. Okay. We will try to add that as well. But as promised, I think this is the material that you can actually do. And what I will do is, I'll work with the team to see if we can download it in the form of a PDF or whatever. Might be you can print it out and then study at your end. Let me work on that, and then we will update you on that. Okay. Good. We promised that, I think we delivered. Equity, anyways, this is nothing new. This is all the existing stuff, that we had, from NISM 30, and then we got it here. Okay. Same thing with the interest rate derivatives. Again, I keep repeating, guys, please, study this one first. Study forwards and futures first. Study forwards and futures first. Study options. And then strategies. 1 and 2 is just basic. Again, here 1 and 2 is just basic. You hardly get 3 to 4 questions from chapters 1 and 2. Once you're able to, I think we have already done futures in most of your confident, we will do options questions as well. Once you're able to do, these 3 chapters, right? And I think you can, it's not that, overconfidence or something, but I think given you are already there in the industry, you can go and blindly write the exam. Okay. Because these are the ones which are, little, tricky. That's it. Understand those concepts, and I think we have come a long way there. Good. Any questions on this? Check it out and create your account and then start preparing. And please give us feedback on what else you wanted to see, so that we can keep adding and we can keep building there. Perfect. Okay, let's switch on gears. What we will do today is, so we will actually do, there is something called as, see, this is the concept, little key concept that you have to understand here. Especially in the bull calls, but let me match this. Yeah, bull call spread and so what we will do is, so we have studied futures on how to do the hedging there. Okay. I stopped on the arbitrage thing. Arbitrage will cover it. There won't be any questions from this. It is just from the for the knowledge perspective that this I will cover it. Don't worry about that. From the exam perspective, I think this is the most important part that we have to study. Which we'll start doing it today. So options are also used for trading and hedging, right? So we do options. What did we say? Primarily, the whole SIF has come into the picture because there is existing mutual funds actually do hedging, and SIFs has been allowed to do the without hedging. They can actually take a short, which is called naked short. Okay. So we will cover a couple of concepts which are important. Please listen to this carefully. But before that, let me switch to our house example. Okay. So how many of you remember ITM, OTM, ATM, our whole concept? All of you remember ITM, ATM, OTM concept? Yeah, sir. Go ahead. Go ahead, sir. Ashish, sir.
Sir, I just raised a hand for that I know.
Okay. Okay. Achha. Everyone is clear on the ITM, ATM, and OTM concept, right? Are come on, yeah.
Yes, sir.
Oh, perfect. Now, what we will try to do is, so I'm going back to the same house example, right? See, whenever you have a doubt in an exam, always go to our gold example in the case of the forwards. Always go back to our house example in the case of the options. Okay. So just to quickly repeat, what did we say here? 1 crore, 95 lakhs, and then 1.2 crore, right? So these are the 3 strike prices, that I have done. Strike price and spot price, so I'm not going to the concept again. Okay. Now, what does actually see this whole concept, especially vertical spreads? What does it mean by that is we are looking to hedge the our positions. Okay. So primarily we are looking to hedge the positions. How and all, there are 2 main characteristics in hedging, especially from the trading perspective. Whether you hedge on the there are 3 things. Let me put it here, right? Whether you take calls or puts, okay, what is it called? The same underlying, and then whether you do it under same expiry or different expiry. Okay, I'm slowly introducing this different things. Either you take both calls, when I mean by both calls, both on the buy side and short side. Don't worry about all the jargon. We'll go through an example and we should be super clear of that. Okay, take both calls, both buy and short, or you take either position. Sorry, you take opposite positions. Okay. What are the positions that we generally have, in the case of, buy and call, long, short, short, long, right? So that is a matrix there, right? Please stop me if you have any questions. But first, let's go through the example here, right? So this is actually called, vertical bull spread. Okay. It is called bull spread and it is called vertical because we are taking, however the strike price is happening, strike prices will happen on, the vertical line. Okay. That is called vertical bull spread. First, let's actually go through the example and understand the concept a little bit here, right? So there's a common scenario, right? So imagine you're buying 1 crore of house today. Okay. And, you feel that, you feel that like, the house will grow in its value. Okay. But, what you can actually do in the case of the buying the house, right? If you feel that, there are multiple factors that comes into your way. Okay. For example, like might be the loan is little tricky at this point of time. Might be the downward payment is not available at this point of time. So the buying of the house is still iffy at this point of time for you. But what you go and actually tell the seller, hey, you know what? I'm actually going and buying, 1 crore house at a certain point of time. Okay. What is this called? What is this called?
Contract.
Contract. I'm entering into an option contract. Basically, it's an option contract. Okay. What does option contract do? It gives me the right, but not the obligation to actually honor this contract. Okay, that's what we have learned multiple times in the option classes. Okay. Now, what am I going to do? I am going to pay the builder a small booking fee for the right to buy. Okay, the house at 1 crore anytime in the next 3 months. Okay. Now, what is actually this called? Booking fee is in our jargon premium. Very good, right? So booking fee is actually called premium, right? Now, at the same time, what I will actually do is, because now what is the price that I have locked in here? What is
1
the
crore.
price? 1 crore, right? So what? Let's understand the couple of scenarios. Just revise this option concept here a little bit here, right? What happens, if the price goes to 1.1 CR?
So I will be in profit.
You will build the profit. Why? Because you will honor the contract at 1 CR and then 1.1 minus 1 CR is the profit that I will generally make, right? 1.1 minus 1 CR is what I mean to say, whatever the 10 lakhs profit is what I will make, right? In case if it is 95 lakhs, what happens in this 95 case of the 95 lakhs test? We
Will not
discuss this
exercise
n
my
number of
contract.
times. I will not honor the contract, right?
I lose my premium.
What will I lose? I will lose my premium. Correct. Oh, now everyone clear until here? This is the example we have done multiple times already. Okay. Now I'm adding, this is what we have done for the option contract first, right? Now I'm adding another layer on top of it. Okay. What is that another layer? My another layer is, I wanted to hedge my position. What is my position? My position is I have actually, taken a 1 crore contract, option contract that I have, sort of, sorry, the contract that I have written with my seller by paying a certain premium. Okay. Now, can I do in the real case scenario? This also happens in an informal world as well, right? So I don't have any intention to buy the house. Okay. For example, I'm a flip and flop guy. I generally flip the houses. Okay. What is flip the houses? Might be I buy it at a lower price and then if the price increases and I'll actually sell it at a higher price. Okay. So this is a very common thing in the real estate, that happens. Of course, it depends on it is, vagaries to multiple other factors there. It's not as simple as that, but like generally, you can buy it at 1 crore and you can sell it to, someone else at 1.3 crore. Okay. Now, while I have entered the contract at 1 crore with the seller here, what I will actually do is I will find another buyer. Okay. Listen to this carefully. I will find another buyer. This is part of the same contract, by the way, right? I will find another buyer and I will take a booking free from them. What is this booking free for here for me?
Premium again.
I am getting the premium. Everyone got it? In the first case, what is here? I paid the premium, right? I paid the premium. In this case, what am I going to do? I am actually getting the premium. Yes or no? Right? I am getting the premium here. Okay. What am I going to say? Hey, I will come to you and then I will say, hey, you know what? I think there is one nice, house. I think the house is going to go up, ABC, XYZ. Let's enter into a contract. You can actually buy the, house at 1.2 CR, irrespective of whether, how much is the, how much of the upside the price even goes to, right? Even if it goes to 1.5 or 1.6 CR, we will honor the contract at 1.2 CR. Okay, so that's what is the contract that I'm getting with who? The other part, with my buyer. I'm entering into a contract with the seller. I'm also entering into a contract with the buyer. Okay. In the case of the seller, I'm actually paying the premium. In the case of the buyer, I'm actually getting the premium. Okay, guys, everyone clear on this until here? It's very simple, plain English I'm talking.
Yes.
Cool. Good. Now let's understand the scenarios here, right? Let's understand the scenarios here, right? What will happen? What are the two scenarios here? Everyone.
Yeah, prices go up or prices come down or stay
First,
there.
let's see, 1 CR, right? There are two angles here, 1 CR and then 1.2 CR, right? Okay. Now let's put into, some numbers here, what is going to happen here, right? If the house stays exactly at 1 CR, okay, the price neither goes up, neither goes down, right? What is going to happen here?
So whatever I paid it becomes zero, and whatever I received it, I gain my income.
Right. Very good. Right. So primarily, guys, please follow and stop me anytime. See, if the price, is stays at 1 crore itself, right? Price hasn't moved anything. Okay. Now, what I have two legs, right? Sorry. Let me zoom this a little bit so that you can understand. I have two legs here, right? What are the two legs? One leg is, guys, please let me complete. I have paid premium, right? To the seller. Okay. What is going to happen here? For example, I can either decide to execute the contract. Imagine if I'm not executing the contract. Right? What is going to happen? I will lose my premium. Yes or no, everyone? Everyone clear? Yeah. Okay. Now, what is the second scenario? I got premium from my buyer. Right? Everyone? I got premium from my buyer. Okay. Now, what is the promise that I have given to my buyer? You can execute the contract at 1.2 CR. In that scenario, will my buyer execute the contract or not execute the contract?
He will not execute contract, it's not in favor.
Exactly, right? Everyone following me?
No, come again, sir. I didn't get this.
Okay, sir. अभी तो क्या हुआ, right? I had two legs, right? One leg is I'm actually entering into a contract with my seller, and another
Right.
leg is I have a contract with my buyer, right?
Okay.
I am saying that 1 CR I will buy. 1 CR is the contract price for with my seller. 1.2 CR is the house for with my buyer. Okay. If the price of the house remains same at 1 CR, will the buyer execute the contract?
Yeah, he will execute, no? No,
Actually, he can execute.
he will execute because he'll sell it to at 1.2 CR to him.
Primarily, he can execute the contract, but no. Why will he execute? There is no point, no. See, the actual price is, you are executing the contract at 1.2 CR, sir. The actual price of the house at this point of time is 1 CR. If I'm executing the contract at 1.2 CR, at this point of time, am I in loss or, profit?
So he has the option not to buy. No?
Exactly. That's what I'm saying, Don't get confused. So primarily what happens is, as a buyer, I will not execute the contract. Yes or no? Everyone clear on this? Don't get
I think,
confused at all.
sir, you mentioned ABC, so it will be clear. I mean,
ABC?
A is the original seller, right? A is the original seller, B is the buyer, and C is the new buyer at 1.2 CR.
Okay. No. Why? Okay. I think you're not able to visualize this. Let me repeat this one more time here, right? I will remove everything here. Okay. So first of all, let's go back to the scenario here, right? Might be I will put in, the table format. That should be easy. 1, 2, 3. Can I do 3, 4? Okay, we'll do this 3, 4 here. Okay. So what is this? Now I am the person here, right? So let's say Kiran here, right?
Yeah.
Kiran has a seller. Kiran has a buyer. Everyone clear?
Okay.
Kiran goes to the seller and then says, I am buying the house at 1.2 CR. Kiran goes to the buyer and then says, I'm actually buying the house at 1.2 CR for you. Everyone clear until there?
Okay.
In this case, Kiran pays the premium. In this case, Kiran receives the premium. Everyone clear here? Super simple. Huh?
Yes.
Now, what are the scenarios, that can happen here, right? Now, the first scenario is the house price remains same at 1 CR. What is going to happen in this scenario with me?
He might not buy.
Correct. There are two scenarios. Either I can execute the contract or I can ignore the contract. Why? I just only have the right. I don't have the obligation to enter into the contract. Okay. In this case, what is going to happen here? What is my gain?
Premium is lost if you don't execute.
What am I paying? I am actually losing only the premium paid. Everyone clear? Should be super simple. No complications at all. Okay. Now, in the case of the buyer, the house price remains at 1.2 CR. What is going to happen with the buyer?
He will not execute the contract.
Very good. That's it. He will not execute the contract. Why?
It's not in favor.
In case, I have agreed to buy at 1.2 CR, but the price is only 1 CR. If I am buying it, there is no point, right? And I'm actually, paying to 20 lakhs extra, right?
Okay.
So I will not execute the contract. Okay. In this case, what is going to, happen here? What is the gain or loss? Okay. This is the loss here, right? Guys, please put yourself and mute. There's so much background noise. Kind request. Okay. What is the loss here? What is the gain or loss here, guys?
There's a gain of whatever the premiums I received.
Very good. Am I going to gain?
Yes.
Kiran will gain the premium paid by the buyer.
Seller.
Sorry, my bad.
Seller,
Buyer,
right?
What seller?
Buyer.
Kiran will gain the premium paid by the buyer. He pays the premium and he loses the premium and then he will say, I'm walking off the deal. Got it? Now, what is happening in this particular scenario? Okay. Now tell me what is happening for my profit and loss.
And the first scenario, you're getting the loss. Second scenario, getting the profit.
Zero.
Primarily, rather than zero, can I say, can I say it is limited loss and limited profit for me? It can't be zero, right? So for example, if I'm paying the seller only 50,000 as a premium, whereas if I'm taking from the buyer 80,000 as a premium, I'm making that 80 minus 50, 30,000. No, you're getting my point. So it can't be that it's just that I'm paying 50,000. I'm only taking 50,000 from the buyer. Whoever said the zero, Naveen sir, is that you? Okay.
Yes.
You got it, sir, right? Rather than zero, what is going to happen here? I'm actually making limited loss and limited profit. Everyone clear on this? Super clear? Should not be any questions at all.
Limited loss and limited profit concept? I mean, just because I assume.
Okay. Hold on. I'll explain. See, I pay the premium here, to the seller, right? क्या नंबर डालेंगे यहाँ पे? कितना पे कर रहा हूँ मैं seller को?
50,000.
50,000.
Yeah.
Right? I'm receiving the premium here, right? From the buyer, everyone? हाँ? क्या नंबर डालेंगे यहाँ पे? हाँ? Hello?
60,000.
60,000, right? See, it has to be something very close, right? It can't be that I'm paying a premium of 50,000, or might be I can actually take 80,000 or something, right? Something on those. I'm just taking a hypothetical example. But it can't be that I'm actually taking 2 lakhs from this guy, right? The buyer will be like, you just don't. Guys, someone has to put yourself on mute, please.
Very
Guys, kind request, we're putting in efforts, I'm under the weather, I'm teaching the class, the least you can do is put yourself on mute. Okay, now let's get back, right? I'm paying the premium of only 50,000, sir. Okay, I'm receiving the premium of either 60,000 or 80,000, right? I can't, receive the premium of 2,000. I can't charge 5 lakhs, 10 lakhs to this, right? Will the buyer pay? Naveen, sir?
2 lakhs
Naveen?
you won't.
Huh?
2 lakhs you won't pay.
2 lakhs he won't pay, right? We will stuck with 60,000 or 80,000 is the premium that he will be paying. As a buyer, he will be paying. Okay. Now, what is the loss that I'm going to make here? 50,000, no?
50,000, yes.
What is the profit that I'm making here?
either 60,000 or 80,000.
60,000 or 80,000. Very good. That's it.
Yes.
So, what is the profit that I'm making here? Ideally, either I'm making 10,000 or 30,000 profit. Clear, guys?
Yes.
Clear now? And now
Yes.
I think it should be super clear.
Yes.
Everyone clear?
Yes.
Yes, sir.
This concept actually is called bull spread, in the stock market. Everyone clear? This concept actually is called bull spread in the stock market. Okay. We will convert that into technical jargon in a bit, but let's also see one another scenario. I think we can see. We've seen 1 crore, price resistance 1 crore. Okay. Let's see 2 other scenarios here, right? Let me copy this. We will convert this into jargon. I know once you understand this, you can answer the questions very, very easy. Okay. Now there is another scenario. Imagine if the price goes to 1.1 CR in this case. Okay. 1.1 CR. Same thing. 1.1 CR. Here, what 1.2 CR is for me my strike price here. This is 1 CR is my strike price here for me. Okay. Now tell me what is going to happen in this scenario. What is going to happen in this scenario? Let's fill in this blanks here.
I will be in a profit.
Okay. First things first.
Buy. First thing buy.
First things first, I will execute the contract. Am I correct?
Execute the contract.
Okay.
Yes.
First things first, I will execute the contract. Okay. Why? I have agreed to buy it at 1 CR, but the current price is 1.1 CR. So ideally, I will be making 10 lakhs profit, even if I sell it today. Okay. I will execute the contract. Okay. In this case, what is the gain or loss for me?
10 lakhs.
Gain
10 lakhs minus
50,000.
premium paid. Right? 10 lakhs minus premium paid. What am I making here? Profit. Here in this case, what is happening here?
Profit.
Can my profit, how can we buy my profit?
Where?
How can we buy my profit actually? Let's talk in terms of limited and unlimited.
Unlimited.
Very good.
Limited.
No, sir. Unlimited. I'll tell you what.
Acha. Okay.
Kaiko? Sorry, I got the Hyderabadi thing. Okay. My bad. Sorry. Okay. Why? What did we discuss before? Imagine, if the government, tomorrow is announcing that there is
Yes,
something
yes.
coming next to the house, right?
Yeah. Correct.
What is the
correct.
potential it can happen here? This 1.1 crore can actually become 3 crore or 4 crore. Yes or no, guys?
Correct.
Huh?
Correct.
Okay. So in this
Kiran sir
case,
will be very happy.
sorry.
Kiran sir will be very happy. 1 crore to become 3 crores.
That is what is happening in Hyderabad for no reason. Okay. Anyway, so 3 crore or 4 crore, and the profit that I can generally make is unlimited. But in this instance, the profit is
Correct.
equal to what I have made, 10 lakhs minus premium paid. Okay. Now let's take the case of the buyer side, right? The buyer, the strike price for us is 1.2 CR, and what we have, the current price of the house is 1.1 CR. Okay. What is going to happen with the buyer?
He
Will not execute.
He will not execute the contract.
Not
Very good. He will not execute the contract.
premium.
What is happening here?
Lose the premium.
No.
Gain premium, receive premium.
Talk from Kiran perspective, sir.
Kiran
Receive
perfect.
premium.
Yeah. He'll gain. He'll
I will receive premium, right?
I'll
Someone
receive premium.
said that. Gain. Profit, I make profit, which is equal to the premium paid by the buyer.
Buyer.
Okay. Now, what is the profit here?
Limited.
Limited.
Very
This
good.
is limited.
This is second scenario. Guys, everyone clear? I will actually
Yes.
share this, what I meant to say, the calculation for you. The whole concept of, the spreads, straddle strangle is completely dependent on this only. Once you're able to understand this, you will be able to clear. Okay. Now let's talk about the third scenario here, right? We will do the third scenario. What is the third scenario here? What happened here?
Price coming down.
No. Price have come down. We have already done, sir, here.
Price will increase more than 1.5 crore like that.
Let's see 1.5 crore. Let's see price has gone up. We'll see the price has gone up also in the next scenario. But let's say now the price has gone up to 1.5 CR for both. For me and for the buyer. Okay. Now let's build this.
Will execute the contract.
Very good. I'll execute the contract. The same thing. I'll actually will accelerate this. I'll make gain equal to
50 lakhs minus premium.
50,000.
50 lakhs minus premium.
Yeah, minus premium, and then you can again here is unlimited.
Unlimited.
Or limited, depending on how the price, our price, right? Now, in this case, what is going to happen?
He will also execute the
To
contract.
execute.
Very good. Very good.
Execute.
Now you guys are like pros now, we all can become fund managers. No, absolutely. This is what it is.
Loss.
Yeah. Execute the contract. Now, what is the gain or loss
Loss.
here for me?
Loss of 30 lakhs.
Yes.
30 lakhs
Loss
minus
of-
premium.
Loss of
30 lakhs
very good.
30 lakhs minus receive premium.
minus received premium.
Perfect.
Minus premium.
Lovely. So how am I defining the loss here?
Yes.
Limited.
Limited.
Unlimited.
Could be unlimited as well. also, no?
Unlimited.
Because let's switch the guys.
Okay.
Guys, please put yourself on mute. I know it's going all over the place again. So imagine we are going to, if the price is going to 3 crores or 5 crores, right? In only it's 1.5 CR, I'm making a loss of 30 lakhs, right? Imagine if it is 3 crores, I'm making a loss of 1.8 CR, right? Because I have to honor the contract, okay, at 1.21, okay? So the loss can be unlimited here, okay?
Unlimited.
Now let's see one last scenario, and then we'll quickly go to the PowerPoint. One last scenario here is, what is this? 95. Right? Imagine the price is 90 lakhs and 90 lakhs here. Okay. In this scenario, what is going to happen for Kiran?
I will not honor the contract.
Not honor the contract. Nice. What is going to happen for me?
Lose of premium.
Lose a premium of
Yeah.
3,000.
Loss of only the premium. Okay. Here.
Limited.
Sort of limit.
Limited loss.
Very good. That's it. Here,
Not honor the contract.
not honor the contract. Very good. That's it. Gain or loss?
Loss.
No.
No, it's a profit of
Gain,
Receive premium.
Gain, right?
Gain
For me,
premium received.
from
Gain
current
means
perspective. So,
Yeah.
I know everyone is a process. From the current perspective, why? Right, he's not honoring the contract, but he paid me the premium, no? So for me,
Correct.
it's the gain for me, right? What is
Gain
the
of
gain for me?
premium. Gain
Premium
of
paid
premium.
by the
Paid.
buyer. Okay.
Buyer.
Limited or unlimited, guys?
Limited.
Very good.
Only the
What is-
premium we can able to get.
Premium.
Correct. That's it. Okay. These are the 4 scenarios that can generally happen. Okay. This whole concept actually, consists of for you, the spreads, vertical spreads. Call, put, bull, bear. That's it. We have done 4 scenarios, right? Call, put, bull. We'll go through this again, but we revise this, quickly at a higher level. We'll connect that. But the first things first, everyone is able to understand this part here, right? Any questions? You should not
Yes,
get the question.
understood as of now.
Sir, I have a doubt on this scenario 2.
Tell me, sir. Scenario 2 is which one? This one?
Yes.
Okay. What is the price?
I have not understood this actually. 3, 4, and 1 is clear, sir.
Okay,
So-
first of all, let me get to the scenario. What is the scenario 2 that we discussed? Okay, here, the price is the same, 1 crore, 1 crore, sorry, 1 crore, 1 crore, 1.5 CR and 95 lakhs.
No,
And
not
we-
this, the above one, sir. 1.1 and 1.1. The above one.
1.1 and
So 1 crore and 1.
Here.
okay,
So-
yeah. No, go ahead, sir. Yeah. Why are you confused here?
So I'm saying I went to a seller
Mm.
and we have the deal a price of 1 crore,
Hmm.
and I went to a buyer
Mhm.
and have a contract at 1.2 crore.
Correct.
Now the price has come 1.1 CR for both sides.
Correct. The what is that? Spot price is 1.1 CR in the market. Correct.
Right.
Go ahead.
So I have paid the premium here 50,000, here the 80,000. So I have loss of 10 lakh rupees here.
No, why loss of 10 lakhs?
Yes.
Go one at a time, sir. I what is the contract that I made with the seller? 1 CR, right? Which is my strike price, right? If the spot price, today market price is 1.1 CR, will I execute my contract or not?
Okay, understood, sir. Agreed. Understood now. No, clear, sir.
Now you got it? Perfect.
Yes, sir.
Any questions, guys? Everyone, please.
Kiranji, just one question.
Please.
So you have written Kiran, seller and buyer, right? Concept is okay, but इसमें किरण पहले में किरण सेलर है, दूसरे में बायर है क्या? ऐसे है क्या?
Exactly.
Okay, पहले में किरण सेल कर रहा है और दूसरे में किरण बाय कर रहा है, right?
Which is what is called, sir?
Spread, bull spread हो गया ना ये तो?
Hedging.
Hedging, yeah, basically. Yeah.
We're studying the strategies, right? This is hedging using options. What am I actually trying to do? See, I don't want to in this case, for example, in this case, right? Sorry. Forget about unlimited profit here, right? Let's see in this case itself, right? In this case, what am I going to make here? 10 lakhs as the profit here, right? Or I think let's look into the 95 lakhs. Okay. Here, in this case, for example, if I haven't hedged this, piece here, if I haven't created this leg, this is called leg, okay? In the stock market jargon, okay? I haven't created this leg, okay? So now the price, the strike price is 1 CR. The spot price, the house price is 90 lakhs. What am I going to do? I'm not honor the contract, right? How much am I going to lose here?
Premium what we pay.
Right?
50,000.
50,000, right, sir? I'm just translating this into why this works, right? Now, I'm going to the buyer. What is this? I'm actually creating a hedge, right? With the buyer, I'm creating another leg here. the same concept here, and I am receiving the premium of say 60,000 only, right? In this case also, what is going to happen here? Not honor the contract. The buyer is not honor the contract, right? What is the gain that I am going to make here? How much, sir?
10,000.
Sorry, let's say 60,000, right?
60,000.
Let's say 60,000. I will do the final thing here. Okay. Now, what is my final profit or loss here?
10,000.
10,000 profit.
Got it, sir? Kamal, sir.
Yeah, Kiranji, I knew that concept actually. So
Why?
I just wanted
No. Just to complete here, why am I doing this?
just to limit your loss and profit actually.
Exactly.
So you're hedging.
Primarily,
Yeah,
right?
exactly.
I don't want to lose all the 50,000, right?
Right.
When I created another leg here, what did I do? I actually made money. I limited my loss. On the top of it, I made limited profit here. Okay.
Yeah, I just wanted to means as you are buying the far leg or selling the far leg, right? Basically, we buy the near leg and sell the far leg, right? Usually.
Yes. Don't worry. That is where we are coming to this. Okay. Go ahead.
But you must have taken the hypothetical scenario because the far OTM is always like lesser the premium, right? Yeah, it is very
okay. So we'll quickly introduce the jargon here, right? Don't worry about this. We will go through this tomorrow again one more time because this is very, very important, and the 100% questions aayega. Okay. Without this, there will not be any exam. Okay. So primarily, what this is like, what we have done is, the spread thing here, right? Here, what am I trying to do here? Let me quickly show you this part. I think you understood the examples, but let me complete. Okay, we'll go through this. Try to understand, if not, again, as a promise, right? We will do this again tomorrow. So imagine if I'm doing a bullish call spread. Okay. What am I trying to do here? I will buy a lower strike call and sell a higher strike call. Okay. First things first. In the case of, let me actually write it here. You can take a screenshot, or I'll actually share you this document soon after the class. So primarily, let me put it this way. Might be I will actually do a table here.
So you can take a practical solution. I mean, that your app.
Yeah, we will do that, sir. But like I want to just introduce the jargon, right?
Okay.
So primarily in the vertical, spread, there is bullish spread and bearish spread. Okay. Within that, there is always calls, puts. There is always calls. Don't worry, we will convert this into the examples that we have seen above, today. But for now, just understand this. There are always 4 legs in a vertical spread. Okay. Bullish and bearish calls, and bullish spread and then bearish spread. Bullish call spread, bullish put spread, and bearish call spread and bearish put spread. 4. Okay. Now the most important part, what you have to understand here is so let me write it here, right? Bullish call. See, the questions will be this only. We understood the concept, but so there is. Okay, before that, primarily, just give me 1 second. What is actually vertical spread? First of all, let's look into this. What I will do is, we will buy one option and sell another option. So, for example, on the same stock, just taking a hypothetical example. Okay. In the case of this, strike price will be different. Expiry will be same. Don't worry, we will go through this, tomorrow again, because this is the concept which gets little tricky. We'll map that to the housing thing that we did, but like in the best interest of the time, for now, just understand this. In the case of the bullish spread, what I'm going to do is, I am going to buy one option and sell another option. Okay. What is one option and sell another option? So either I am buying a call, or I'm buying a call and selling a call. I'm buying a put and selling a put, which is reverse with the bearish spread also. Everyone clear until here? Clear?
Okay. Okay.
Okay, don't worry. We'll make your life easy. Okay. Now here, in the case of the bullish spread, please. What actually happens is, we will buy long call with lower strike price. This is what the famous question in the whole exam. Okay. Sell call with higher strike price. Okay. I will take a quick example here. What is Nifty, today?
Approximately 24,200.
We can throw some numbers there right now. I think
24,200.
24,000 something.
24,220.
Okay. So today spot is 24,200, right?
240.
Whatever. Let's take 200, for the easy thing, right? Now I am actually buying, 24,100 call here and buy, and I'm actually selling 24,300 call. Everyone understood this? Bullish spread is, I will actually buy the call at the lower strike price and sell the call at the higher strike price. This is what you need to remember from the exam perspective. That's it. This is a very, very famous question. What is bullish call spread? Bullish call spread is you're actually, selling the call at the buying the call at the lower, strike price and selling the call at the higher strike price. Okay. Any questions here?
No, sir.
Okay, perfect. This little bit of a theory that you have to remember, unfortunately, let's go through this here. What did we say here? This one. Buy at the lower strike call and sell at the higher strike call. Okay. Now, similarly, what is happening? Bullish puts, it's the reverse, right? You sell the higher strike put and buy the lower strike put. Okay. Bearish is it's always the reverse, right? You only remember this part here, and you can actually get everything of this. You can just put it on the paper. You need not remember all this. For bullish calls, always remember this: buying the lower strike call and selling the higher strike. Okay. So put co, you reverse it, sell the higher strike, put here, that comes first here, and buy the lower strike put. Okay. Just reverse of this. The reverse of this here is sell the lower strike call and buy the higher strike call. Okay. Here, this is the reverse of this: buy higher strike put and sell the lower strike put. Got it? Everyone clear on this? I know it might be a little confusing, little bit of a jargon there, but it's not. But clear on this? Any questions? You have to remember this part. The first thing, if you can remember, rest all becomes easy. Any questions? Any questions, guys?
No, sir.
Go through this, and I'll upload this. Go through this. Might be we'll map that with. Can we put in an Excel for better representation? I will actually create something and I'll share it with you also. Don't worry. Okay. Now we'll quickly go through these concepts. I need not explain this. We have learned already calendar spreads, right? So whatever we have discussed is the vertical spread, and this is actually called calendar spread. So calendar spread is same option type, both calls or puts, same strike price but different expiry dates. Okay. Same option type. See, always remember three things. In the hedging part, right? What is the underlying instrument? Are you doing buy call? Is it same or different? Number two, is it the same strike price or different strike price? Okay, that is number two. Is it the same expiry or different expiry? Okay. What I will do is, might be we will create a nice table, create one page, nice table for you. to just for the remembrance sake, we will put all this stuff and we'll give it to you so that you can actually use it as a cheat sheet, for the exam purpose. Okay, don't worry, we'll get you these questions done. Understood this? Calls puts same strike price but different expiry. This is called actually horizontal spread or calendar spread. Calendar spread, we have also seen this. If there is 3 months, how many calendar spreads can be done? 3. N into n minus 1 by 2. That's what we have discussed. Okay. Now, diagonal spread, you can go through that. That's not much important. Okay. I think straddle and strangle, I'll cover that tomorrow. I think there's too much of overload today as well. Any questions on today's topics?
Kiranji, in calendar spread, I think you already explained. I think the strike price should be same, right? In both the 3 months. No, 3 months.
Yes. Strike price should be same, but different expiry date. The only change is the different expiry date.
Spread across the months, right?
Correct. That is why
How
it is
can you
called
explain
calendar,
that, sir?
Hello.
Price same. This calendar spread, what he said, asked.
Sure.
Said.
I'll take quick example. Someone is asking a question. Just hold on. Let me quickly explain here. See, what are we saying on the calendar spread, sir? Same underlying, same strike price, but different expiry, right? Now, let's say there is 23,500. Let me put it this way here, right? It might be I'm buying Reliance 1300 call July month. Okay. I'm buying Reliance 1300 call August month.
Okay.
I'm buying Reliance 1300 call September month. Got it? What am I doing here? It's the same underlying call and call for me. And it's the same strike price. I'm actually taking only 1300. But what is happening? My expiry is changing here. Got it, sir?
Yeah, correct.
Okay.
But in calendar spread, even strike price can be different?
See? No.
No? Okay.
Let's same strike price.
Okay.
Hello.
Okay.
Yeah.
Kiran sir, I am Bhavin speaking.
Go ahead, sir.
Hello.
Go ahead.
I have one question. I have one question. Just now you show the example of calendar spread. In that you are showing only buying part of Reliance of different series.
Yeah.
Okay. Then where is the then this is not called a spread, right? This is your naked buying only.
No. I know. See, I just gave you as a hypothetical example. So there is a buy and sell that you can also include. I just simplified that. That's it. The point I'm trying to make is you can either take call, put same strike price, but with a different expiry. Yeah.
So in calendar spread, you meant to say you are buying call and put of different expiry or same expiry?
Calendar spread will always be different expiry, sir. That is why it is called calendar. That is why it is called calendar.
So if I will say example, if I will buy a call
No, sir, let's do one thing. Please connect with me offline. Please connect with me offline, and I think in the best interest of the time, I will get on a call with you and explain to you on that part. Okay. Any further questions? I'll ping you, sir, after the call.
Sir, I have one question on what bulls call spread. So we are using a bull call spread. We are anticipating a bull side, correct? So the same scenario we are playing in the put side.
Correct.
So we are playing on the probabilities, right? On that, why you are taking the put side rather than the call side. Is that my understanding is right?
That's correct. Yes.
Okay, got it.
Any further questions? Everyone understood this? What we will try to do, we will just revise this, calendar spread, so not calendar, vertical bull and bear spread, one more time with the example that we have seen, the housing example. I'll map that so that you will be able to understand very clearly tomorrow. Any questions, guys? Okay,
sir,
cool.
Thank you.
It comes from this segment, sir.
Sorry?
What are the questions? How many questions will come on this segment? Particularly put call spread and strategies.
There is a decent number of questions that come, sir. We will do the questions anyways. We have done chapter 3 questions. The YouTube videos are there. So similarly, like, once okay, guys, on the next steps,